Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China produced 260.67 million tons of corn in 2020, the National Bureau of Statistics said on Thursday, barely changed from last year despite weather damage before the harvest in the world's second biggest producer. Corn output is being closely watched as a growing deficit in the country drives prices to multi-year highs, boosting imports to record levels and fueling the purchase of other grains. Full story. The grain is a key raw material in animal feed for China's huge livestock sector and is also used in industrial products.
BlackRock on Thursday said it would more than double the number of companies it engages with over climate-related issues to over 1,000 and laid out stronger goals on other fronts for portfolio firms ahead of the upcoming shareholder meeting season. BlackRock, the world's biggest asset manager with around $7.8 trillion in assets, said its enhanced target list would cover 90% of the greenhouse gas emissions linked to the operations of the companies its clients invest in, globally. It also made explicit its call for companies to lay out plans to reach net zero emissions by 2050, in line with the recommendations of the Task Force on Climate-Related Financial. U.S. soybean supplies will be smaller than previously forecast due to rising demand from domestic processors, the U.S. Agriculture Department said on Thursday. The government also lowered its forecast for global stockpiles of soybeans due to a reduced crop in Argentina following a months-long dry spell in that key export country. But the cuts were smaller than market expectations and soybean futures SV1 quickly retreated from the session highs they hit shortly before the report was released. Disclosures.
Moving on to the top news in the energy sector.
Oil prices climbed nearly 4% on Thursday, with Brent surging above $50 a barrel for the first time since early March, fueled by hopes of a faster demand recovery as countries start to roll out COVID-19 vaccines. The bullish sentiment offset a large increase in U.S. crude inventories that showed there was still ample supply available. Britain began vaccinations this week and the United States could start inoculations as soon as this weekend. Canada on Wednesday approved its first vaccine and said initial shots would be delivered starting next week.
Employees at Royal Dutch Shell's Nigerian joint venture orchestrated damage to oil pipelines to profit from the money spent on cleanup operations, Dutch investigative TV program Zembla reported on Thursday. Employees of Shell Petroleum Development Company of Nigeria (SPDC) recruited local youth to sabotage the pipelines and then hired them back as workers to clean up the mess, the report said, citing research by Dutch environmental group Milieudefensie. Shell's SPDC said it investigates all credible reports of misconduct and takes action where needed.
Moving on to metal price moves.
Nickel rose more than 4% on Thursday as resurgent demand from Chinese steel mills and a rapid rally in iron ore futures fueled a rush of speculative buying, pushing prices above $17,500 a ton for the first time since October 2019. Used in stainless steel, nickel shot up just as the Shanghai Futures Exchange (SHIX-FE) SNICV1 began trading at 1300 GMT, with the benchmark contract on the London Metal Exchange (LME) CMNI3 leaping almost $700 in around an hour to a high of $7,505. By 1645 GMT, LME nickel was up 4.1% at $17,390.
G benchmark iron ore futures in China surged more than 7% on Thursday to hit a contract high, as speculative buying was fueled by expectations that a recovering economy would lead to strong demand for the steelmaking ingredient. The most actively traded iron ore futures on the Dalian Commodity Exchange, for May delivery, soared as much as 7.3% to 976 yuan, $149.10, per ton, before closing up 6.8% at 971 yuan.
Finally, we have the most recent news on the financial market. Investment banks cut the chances of Britain and the European Union agreeing a post-Brexit trade deal on Thursday while bookmakers slashed the odds to 50% after leaders failed to break an impasse in talks. British Prime Minister Boris Johnson and European Commission President Ursula von der Leyen met on Wednesday to try to break the deadlock, but said significant gaps remained and set a Sunday deadline to decide on their next steps.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.